Hello, everybody, and welcome to the webinar, Turbocharge Tech Transformation, Integrate AI Across Insurance. We're glad to have you. We're glad to have everybody from the U.S., Canada, and around the world. There's a large number of participants signed up. It's obviously a subject of great interest to everybody. We've got three fantastic panelists. I'm your moderator for today, Stephen Applebaum. I'm the managing partner of Insurance Solutions Group, and I'm not going to waste a lot of time talking. I'd like to give our panelists and our audience the most time today. Let me just set the stage, if I may. We believe that understanding AI is non-negotiable for insurers. Out of the entire spectrum of technologies that have the potential to affect the insurance industry, artificial intelligence is on track to have the most significant impact in the coming year. In fact, if you look at the statistics and the research, insurers' investments in AI are increasing on a year-over-year basis, and this trend is expected to continue well into 2019. AI is important for insurers because it brings them closer to their customers. AI has the power to connect customer data to product information in real time, enabling better consumer experiences and making processes simpler and faster, ultimately what customers today want and expect. AI is an opportunity to empower insurance executives to focus on the most critical parts of their roles. Nonetheless, in spite of all of that, a major hurdle standing in the way of insurance implementation of AI into their businesses is figuring out how to get started. And our purpose here today is to get everybody focused on that. So with that, I'd like to begin to introduce our panel. So you can see them on the screen, of course, but let me introduce them individually as they're set to present here and share some comments with us, starting with, if I may, with Alex Feinberg. Alex is SVP and Chief Actuary of Combined Insurance. Let me share a little background, if I may. Alex joined the Combined Actuary team as a Senior Vice President and Deputy Chief Actuary in April of 2016, focused on reserving, data analytics, financial, actuarial results, and support of actuarial target operating model projects. In January 2017, Alex was promoted to Senior Vice President, Chief Actuary. Prior to joining Combined, Mr. Feinberg had progressive career paths at Liberty Mutual, AIG, and New York Life. Alex is a fellow of the Society of Actuaries and a member of the American Academy of Actuaries. Alex, please begin to share your comments and welcome.
Stephen, thank you, and good to be here. So artificial intelligence, AI, is obviously a broad topic, right? So I just want to tell you about how we think around this subject in the organization here. And I think we approach it in a very practical way, right? So the first place to start for us is around data. Combined Insurance, we're also part of the Chubb organization. We serve over 2 million customers in U.S. and Canada. So we have significant amount of data to work with. Right? Data and the presence of it here is not a problem. What is a challenge for us is ability to combine that data in one place and consistently have a single view of the customer, right? So in the past, you would have to open up several systems to understand the different products that a customer has, who sold them those products, how long they've been with us, and so on. So over the past couple of years, we've undergone through an effort, and that effort is going to continue going forward, to bring all those data sources together so that we have in one place, which we call the data lake, access to all the available information about a customer, and we could start making judgments about which customers we want to sell more to, which result in unprofitable business for us, or those that are really not interested in our products. And if you kind of think of how airlines approach it, right, with frequent flyer programs, and they treat different customers in different ways depending on their business relationship with them, that's the place that we ultimately want to get to as well. So we've been working on creating that data lake, and that's really allowed us to build a foundation for doing analysis and implementing process automation on a solid foundation of the data in the organization here. It also allows us to understand trends over time, not only look at a specific snapshot in time, but see how demographics and other things we're interested in when it comes to our customers have changed over time. The second aspect of artificial intelligence, I guess you would call it, are the tools that we create and the tools that we use. Again, I think in the past, it was just the analytic resources within the organization that had access to information, and they would then look at that information and make judgments and communicate them to others. Now we're making tools available to our distribution force, for example, to our agency force, so they have access to see how the customers they're selling to are performing. Are they sticking around? Are they buying what they should be buying, right? They understand in real time how, for example, a particular agent's portfolio is trending, right? And they can take action because they know specific items that are contributing to results that they do or do not want to see. For example, persistency, right? We focus a lot of our time on making sure that when we acquire a customer, that customer stays with us for a long period of time. And through the tools that we've created for our agency force, using the data lake that I mentioned, they're able to see which factors from the population that they're selling to contribute to those customers either staying for a long time or tending not to stay for a long time. And that's been really valuable, right? Because as they're using those tools, they can pivot and redirect their sales efforts to customers with those characteristics that make them attractive from a retention standpoint. And that's been very well received, and I think it's actually one of the huge benefits of making the data available to the sales organization is that they now feel that it's not a black box that's impacting their results, but they understand exactly the underlying drivers. And of course, the other aspect of artificial intelligence for us is the analytics that comes out of it, right? And our actuarial and underwriting departments looking at results of those analytics and then identifying corrective actions that we need to take, understanding whether we need to change product features to make them more attractive for the consumer, and so on. One of the things that we're working on now is the customer lifetime value, and that's bringing all aspects of the customer together, both the persistency side as well as the loss side of the equation, and understanding where the most attractive segments that we should target are. And that's been a huge help for us as we try to not only drive growth, but drive profitable growth as well. And I would say, finally, under that umbrella of artificial intelligence is an aspect of process automation. And that's where we're building bots to make the existing process that we have more efficient, particularly around financial reporting. It comes into our reserving practice as well. So if you would imagine an actuary in the past would run a model over time, overnight, and then come back in the morning and understand that it crashed, and they would have to lose a day or more trying to rerun it again. So we're now building a bot that's able to do that, notify you in real time of the things that are not going well, even do a certain aspect of the analysis, and we're trying to shrink the financial quarterly process that way and make it more efficient. And again, what we found there in a similar way that we found with our data is that before you can automate a process, you have to have the process well-defined and efficient already. And to be honest, in many cases, instead of building bots, we were able to create much of the efficiency by changing the process itself, right? So we found, for example, that we had things that we were doing that probably could be done better, and by changing those things just in a simple way, we were able to drive efficiency. But it's that focus on process automation and really trying to get to that goal that focuses us to step back and look at existing processes and make those changes. And I would say those are kind of my initial comments around the topic and what we've been doing here in the organization to address it.
Thanks so much, Alex. That's a great overview because it really covers the entire enterprise, and that's exactly where we'd like to take this discussion. Pardon me. For the audience, I'd like to offer a couple of reminders. I know some people are already submitting questions online. Please continue to do that. And we've left a lot of time on the back end to try to get to all the questions that you've got. We'll never get to all of them, but we'll get to many. And I will moderate that session. Secondly, as another reminder, today's webinar is being presented in preparation and in the run-up to a conference that Insurance Nexus is presenting next year in Chicago. It's called Insurance AI and Analytics. It's going to be held on May 2nd and 3rd of 2019 here in Chicago. And many of the companies speaking on today's webinar and dozens of others from across the enterprise will be presenting there. Many of you are familiar with the Insurance Nexus conferences and the high quality that are presented there. So I wanted to connect the dots for you and just let you know that you'll be looking forward to more webinars like this and to the conference. And with that, I would like to introduce our second panelist, and that's Aviad Pinkovetsky. And you can see his good-looking face on the screen there. Aviad is head of product at Hippo Insurance. This will be fascinating. I don't know if you've all heard about Hippo, but it's going to be interesting. Aviad joined Hippo as employee number 1. Prior to that, Aviad was senior product manager at LinkedIn, where he led and grew its company page ecosystem by nearly 300%. And before that, he spent 10 years as an officer in the Israeli military intelligence, working closely with engineers and military product managers. Aviad holds a BSc in computer science from Ben Gurion University and an MBA from Stanford Graduate School of Business. Please welcome Aviad.
Thanks, Stephen. I appreciate the intro and thanks for inviting me over. So before I jump into how Hippo looks at AI and analytics, I think it would be useful for some audience to actually know what Hippo is doing. So let me start with a bit of context about what is Hippo. So Hippo is an insurtech startup. We are doing selling direct-to-consumer homeowner insurance. Everything is done online, modernized policy that includes coverage for stuff like home office equipment, computer, laptops, equipment breakdown, and many things that are needed by the modern homeowner in today's world. We're growing. We're fortunate enough to be growing super fast. Currently writing policies in 14 states. We take pride in being much easier to work with. It takes about 60 seconds to get an online quote from us, and another few minutes to complete the purchase online, either from a laptop or from a computer. And on average, we are about 25% cheaper than the competition in the states where we are working. We are well funded. Actually, as of this morning, we announced our Series C of $70 million, which brings the total funding of Hippo to $109 million since the company was founded 3 years ago. And maybe the most important metric that we are taking a lot of pride in is our NPS score, which is hovering around 80, which tells you how much we are customer-centric and customer-focused in our approach. And that's actually the segue for how we look at AI and analytics. As a tech company, we do think that it plays a big role in our success, in our ability to grow and build a sustainable business. But at the end of the day, we look at AI and analytics as a mean to an end. And the end goal from our perspective is to get an improved user experience and to provide more value to our customers. It's interesting to note that a popular use case that we've been seeing in the marketplace in the recent couple of years or so is to try and leverage AI toward chatbots, which is an interesting use case that we looked into as well. And we realized that while it can lead to some publicity and maybe potentially to some cost reduction, it doesn't really end up adding value to customers because it's not what customers are looking for. So let's talk a bit about how Hippo does think about AI and analytics and how do we use them to improve our experience. So first of all, let's start with analytics. We think that analytics is one component in our ability to make decisions, either on the online side of the business or on the insurance side of the business. Other criteria could be qualitative customer feedback, actuary constraints or considerations, the policy paper requirements, and of course, regulation, which plays a big role in insurance, but analytics and data does play a big role as well. And in our mind, we use analytics first and foremost on I would say even a daily basis, sometimes even more frequently than that, to improve the online experience and to identify areas where customers are facing some friction when they are interacting with our online system. So one example is that shortly after we launched a year and a half ago, we saw that there was a significant drop-off in one area of the online funnel that we've shipped. And this is something that didn't come up in our testing, it didn't come up in our beta launch and so on, but we did see some problems over there, and it was raised to us and it was flagged to us only because we were monitoring the numbers very, very closely. We looked into this specific step that involved asking the customer for past claims in our onboarding funnel, and we realized that there was a bug that was happening in a kind of a frequent basis, and it affected a large portion of our users that were trying to interact with us. The ability to have the ongoing analytics monitoring allowed us not only to fix this issue, but also to create a series of A/B testing that allowed us to optimize and to make it one of our best converting pages that reduce the amount of friction to next to nothing. So that's pretty much about analytics. But AI is a bit more of a bleeding edge technology that could be used in the insurance space in many, many aspects. So again, the question that we ask is how AI could serve to improve the customer's experience and to make sure that the customer is much better served and protected. So it's not just about cost saving for the company. Let's talk, for example, about our ability, and which is something that we are doing today, to detect what is the roof made of and what is the condition of the roof the minute the customer entered their address. So the way we do it, for example, is that we integrate with several several providers of high definition aerial and satellite imagery of roof and properties, and we are able to assess based on AI technology, which is basically based on training the algorithm on a set of millions of images, to assess in a very high degree of accuracy what is the roof material and what is the roof condition. From what we've seen, and we've tested it quite a bit, it's in order of magnitude more accurate than relying on traditional permit-based information or county records. Just that the accuracy of those standard sources is not great. And being a great source of risk to the property, using AI technology in the sense of recognizing, of analyzing images, allows us to create a much more accurate underwriting decision on the fly as a customer is interacting with us. Another example of using AI is to understand the customer's expectations and preferences in terms of risk and in terms of coverages, and to create a personalized onboarding experience that would allow the customer to get the best and the right coverage that is the right trade-off between their level of risk sensitivity and price sensitivity. But it doesn't stop with the onboarding, of course. It also serves, or could and should serve, a huge role in interacting with customers around claims. So, for example, we're not talking about how to create an AI chatbot-like experience and to replace the claim adjuster. It's not the point here. And we believe that people, when they're talking to an insurance company about claims, especially about high-stress situations, a high preference for them is to have an empathetic partner on the other side, the insurance company, that could help them to mitigate the concerns that they have for, even in some cases, where they're going to stay the night, which is something that AI could not provide in the foreseeable future or ever at all. But what role AI can play in those kind of situations? So, for example, think about a scenario where AI could allow a company, an insurance company, to triage a claim based on the unique characteristics of this specific claim to the right adjuster. Based on AI technology, it could be feasible to understand what is the expected complication of this claim, what could be the best way to remedy it upfront, and who is the best adjuster with the most relevant experience that should be able to handle this claim, and then to surface the additional solutions and avenues to take in order to mitigate this claim in the least painful way to the customer. So the way we think about AI in this sense is more like an exoskeleton, if you'd like, that could empower the employees of the insurance company to be more efficient and to provide better service and make much more intelligent decisions, not only based on their gut feeling and experience that is based only on their career, but based on millions over millions of data points that can be assessed and made and eventually into a recommendation. And the millions of data points is actually an important point, because there are two reasons why AI is actually enabled in today's world, or starting to be enabled. The first one, of course, is the algorithmic progress in computer science that allows companies, and technology companies mostly, to make better use of those data. But the availability of data is also another big driver that plays a big role in the creation of the AI ecosystem. And we are just in the beginning of the road. The proliferation of IoT devices could play a big role by providing millions over millions of frequently updated data points about properties and other assets that are protected. And there are, of course, other like mapping, imagery, and other sources that could also play a role in providing, in enabling this ecosystem. But it's not all rosy. There are a few challenges that anyone who is working around this industry is probably aware of. First of all, even though it's very hype and there is a lot of chatter about it, the technology is not always there. The reason why we at Hippo decided to start using AI actually around roof assessment and imagery is because the AI technology around image recognition is much more mature than other aspects of AI, where the results are not that accurate and not that reliable and consistent yet. So this is one thing. Second thing, there is, of course, the resistance in many organizations to adopt a new technology that could jeopardize some people's job stability or routines. And this is something that is not new in any industry. It's something that always, when there is a potentially disrupting technology, there are those kind of challenges. And third, there is, of course, the challenge of regulation, which in the case of AI could pose a serious obstacle, because it would take some time to make sure that AI is used in a way that couldn't be abused by some players in order to bypass regulatory constraints and to have an unfair advantage or a discriminatory behavior. So this is pretty much how we at Hippo think about AI. To recap, we think that AI and analytics are mostly about a mean to an end to improve user experience all across the board, from buying a policy through servicing a policy and through handling a claim. We think that given the challenges of adopting any new technology and the technical complexity that it entails, using AI analytics tool is something that would take a company's leadership, probably C-level leadership, in order to integrate and to fully utilize into a large organization. And of course, it requires a very capable IT and R&D team that would be able to make the most out of the solutions and not just rely on standard turnkey solutions that would probably won't unlock the full potential of this technology. Thank you.
Thank you, Aviad. Fascinating. I couldn't help but think after listening to both Alex and Abiyad that two very different insurance operations, one large, well-established, legacy, traditional carrier, and one brand new insurtech startup, are both adopting AI and analytics across their businesses in similar but different ways. And I think that is in part some validation of the power of AI and analytics as data streams become larger. By the way, if you want to learn more about Hippo and what they're doing, they'll be at the Insurance AI and Analytics Conference May 2nd and 3rd next year in Chicago. By the way, also, questions are piling in here, so I'm going to move right along and introduce our third and final panelist, my good friend, Fausto Martin. Fausto is a founder of Fausto J. Martin and Company, and I'd like to share his background with you to give you some context for the comments that he's about to share. He has a very interesting framework about AI and analytics as well. Fausto has been in the insurance industry for over 30 years. He currently works with companies across the insurance industry to improve results, drive innovation, and increase employee engagement. Focus is on performance improvement, key metric identification, and building business plans for success. Fausto spent 10 years as Vice President and Chief Claims Officer of the Auto Club Group. He had responsibility for claims across 11 states, including strategy, loss, and loss adjustment expense. And during his leadership, he completed a claims core process redesign. Fausto came to the Auto Club Group from Safeco, where he was AVP of Auto Field, with a responsibility for commercial and personal lines physical damage claims on a national level. Prior to that, Fausto worked for Geico. He is the past chairman of the PCI Claims Committee and has been a member of several industry advisory boards as well as community boards. He is currently a CLM Fellow, has a Bachelor of Science degree in politics from the Catholic University of America in Washington, D.C. My pleasure to introduce Fausto.
Thank you, Stephen. What I want to do is take my time allotted and talk about and focus on the claims process. That obviously is my background, and I think that's also where we find great opportunities to implement AI and use AI. And as you know, the claims process is about first notice of loss, or what I like to call information, and gathering information on what happened. It's about investigation, it's about evaluation, and ultimately it's about the adjudication or settlement resolution, of that claim. And to manage across those aspects of the process, claims leaders and organizations really focus on the loss costs. They focus on expenses. They focus on customer service, the customer experience, and the employee engagement. And so you start asking yourself, or you may ask, where does AI work? Where can it work in the claims process? And I like to say that AI, can work everywhere and can work anywhere in the claims process. It just needs to work in the right places. When we talked about process in the past, we usually asked several questions, and I think they're still very relevant today when we look at our processes. One of my esteemed panelists earlier talked about process, right? Look at the process, look at the process. And you have to ask yourself, what are you doing? Who's doing it? And in the old days, when the days of BPO, we talked about, do we need to do it? Or now, more importantly, do we need to do it the same way that we were doing before? I think that AI, to be effective, needs to deliver efficiency gains. It needs to deliver speed. It needs to deliver accuracy. It needs to deliver clarity, right? And produce data. Look at data, produce data, so that you can really gauge where you are in your business and what you need to do to address opportunities in your business. And it needs to be friendly. It's a scary world to jump into AI, and I'll touch a little bit about that in a few moments. So to me, AI becomes the new true outsource, the new BPO. But instead of a third party, it's artificial intelligence, it's machines, it's bots. And I think that's a little bit different than in the past, where you were taking work out of your building, you were sending it outside, and you were trying to gain leverage in expenses and efficiencies, truly 24/7 operations, which, by the way, 10, 12 years ago, when this became popular, was just a mind-blowing experience for the insurance industry, who 10, 12 years ago had already been in place for 100 years, and not much has changed when you really think about it, to the way that we did insurance and even the way that we handled claims. I think it's critical for the insurance industry and claims in particular to move from where we were recently, the early pre-internet days, right, to full-blown. I like to use the example that a few years ago we were playing Pong. Then we moved to Frogger, and we really need to get to Fortnite. And I don't think that we're there, but we are moving that way in claims. Again, it's 100 years of a certain process that really needs to move. I read an interesting article recently by Jason Berlin on the big change in 2017 and 18, and that was around telematics, right? And that's one piece of it, but I'm not going to go down the telematics path because I think we have enough to talk about with artificial intelligence. So how do you decide on AI? Well, clearly, as a business owner and the C-suite folks, you're going to look at the ROI, right? And I'll talk about ROI a little bit later. And you need to be targeted. You can't sit there and say, I'm going to implement AI across my whole organization. Those kinds of views generally don't get you much farther off than a whiteboard. So I like to look at it as simple, intermediate, and advanced. Now, before the tech folks start telling me that AI is not simple, I don't mean that it's simple to get AI, but we'll look at the tasks and the operations in those terms, and you begin to think of where can I plug and play, and where can I get my quickest result that really frees up expenses, capital, and time. And so let's look at what I mean by simple. This is the task-based operations that occur today in many insurance claim organizations that include rekeying, that include touching paper over and over again. And so really looking at AI as a way to eliminate that rekeying, the scraping and entering of data, really taking a look at AI as an enhancement and then eventually a replacement to back office operations, which are limited 8 to 4:30, maybe you get an 8 to 8. But processing that information on a 24/7 can have an impact on your customer service and can have an impact on your expenses. In these simple, more simple tasks, right? AI will deliver reliability, speed, and accuracy really above what you expect or what you get from the human applications that you use. It is really taking that true BPO of old and bringing in this new idea of this is my new business process outsource. One area where I have found opportunities in working both with service providers as well as carriers is closing those gaps between your vendor systems and your claims systems and your processes. And you're closing those gaps today, usually with manual and human intervention. And I think that AI can really apply. The next piece to me is intermediate. And I think that in intermediate, you're starting to make decisions. It's more of a compare and contrast. So what are those functions that it really applies to? Well, clearly audit, right? As you're running your programs against what was happening in the claim file or in the estimate, and seeing, what is outside the norm or expected norm. This is taking a look at a photo and taking a look at an estimate and saying, yes, the photo, the damages in the photo, the condition in the photo is clearly reflected in the estimate, which is what you do today, with adjusters. It's more than those very linear rules that you find in many of the insurance claim estimating platforms, whether it's property or auto, because it's actually taken into consideration the photo and comparing and contrasting. It's taking a look at a picture of a car and putting together enough information that says, yes, this is a total loss, with that being accumulated with data that says it is a total loss, not just like, wow, that looks like a really bad accident or a really bad car. This is about fraud systems, right? Collecting data as it comes in and the impacts on scoring for that fraud. There's some very advanced systems today and tools that you can use and or help build that take all that information as it builds and automatically kicks a score. It brings to your attention, stop, you might want to reconsider. Insurance fraud is over an $80 billion hit a year, according to the FBI, according to NICB, and according to other published areas. And some believe that between 20 and 30% of all claims have a fraud component to it. So if you think about investing more in AI and how I look and what I can find on that claim, and more importantly, how I can take and go back to that policy and say, were there some things in this policy, right, that should have flagged my policy for, in case there was a claim. AI intermediate is automated letters, right, to help with your regulatory compliance. Knowing that it's been 30 days and a notice or a status letter goes out, or a 15-day notice, or a contact letter that goes out. That's an application for AI to help regulatory compliance, customer experience, and to free up the adjuster's time. Subro. We continue as an industry to struggle with our handling of subro. From a first-party perspective, you leave money on the table, and from the whole subrogation process, it tends to be paper-driven and manual, whether you're doing it yourself or you're outsourcing it. But if it is about reviewing a demand, if it is about looking at the estimate, it is about understanding what went in that estimate and then kicking it out. What you pay folks to do today, or you outsource, and then automated responses and filing. That to me, I think is ripe for AI. The next piece is intelligent communication. So this is texting and emailing with customers, where when a customer texts you and asks and wants that self-service, do you really need somebody to constantly be responding, or do you have a system in place that where appropriate responds for you, and the customer gets that instant response and that instant gratification by having their questions answered? Again, our customers today are getting those responses, are having information delivered to them across many industries, and it's time, I think, that claims catches up. Advanced. Well, the advanced to me is you take the photo and the estimate gets written, and there are companies out there working on that, using technology to identify the damage and lining out an estimate for it. Advanced is the ultimate customer self-service. It's being able to get those claims that can be through processed and through processing those claims. It's taking the data and making a better decision both on the claims as well as on pricing. It makes an omni-channel experience for your customer possible, because you're able to treat the customer as they want to be, or you're able to service the customer as they want to be serviced. And in closing, insurance is a switching economy, right, where price and service matter, and we need to be ready to do that. And we do that by better managing the lost dollars that result in price. Claims and claims expenses are 70 to 75% of the dollar on insurance. Remember that human capital is expensive and it is limited. I think you have to have a plan and ambitions of what you want to do in AI. You need to have a complete team, including business, IT, PMO, pricing, sales. IT needs to understand what the issues are that you're facing on the desk, and you need to have that total view of what the process will be, and then understand your ROI. If you can't afford the big bang today, you've got the big, and I just don't have the money to do that, implement on a smaller scale, incrementally, multiple uses of AI that free up capital. Today, we take that freed up capital and we call it savings, and we really should consider all that money that I save and all those expense dollars. Does that pay for the big one that's really going to drive the needle in a greater way? And so, there's that financial aspect to convince your CFO of that. So really, a good ROI, right, measures the profitability of your use of the capital. And what's a good ROI? The reports out there, they're 4 times to 10 times ROI. As you're thinking of what am I going to invest, what am I going to get back? I will caution you that if your ROI is 2 to 1, you really need to think about the risks involved in just that gain. Take the wins. Take the wins when you can, and if it's incremental, that's fine. Take the wins, provided that they offer you loss cost, expense, improved customer service, and employee engagement. I think in closing, what I like to see when I've talked to companies and I've discussed this with them is you need to use AI to free up your very knowledgeable and experienced folks to be involved in those decisions and those claims that present a risk or a greater exposure. And it's not taking their place, but it's freeing them up to make those decisions. Thank you.
Thank you, Fausto. Your knowledge and your passion absolutely show through here. Thank you very much. Thanks to all of our presenters. I need to move directly to questions because we've got about 20 minutes and we want to cover as many as we can. So let me start with probably one of the questions I can ask of each of you. Can you just please answer in the same order as you presented? And the question is on blockchain. If you're using or testing or experimenting with blockchain anywhere in your enterprise or in your client base and in your company, and if so, where are you seeing that implementation? If we could start with Alex.
Yeah, sure. We are certainly looking at it. I don't think that I could talk about any practical applications yet, but it is being discussed in the context of contract and working with intermediaries to really streamline that process. Again, we're pretty early in the process there, so unfortunately I don't have any real concrete examples to share.
That's fine. Thank you. Aviad?
Yeah, so I think it's a very interesting technology and a platform that could have some interesting use cases in the future. As of today, we haven't seen any use case that would create value to our customers. So at the moment, we are focusing our attention and efforts on other directions for the most part.
Thank you. Fausto, in your experience and your knowledge of the industry, anywhere, have you seen anything yet?
Yeah, no, it gets discussed either with the service providers or with the carriers, but there are less complicated, more immediate value impact and return areas that get addressed. There's still concerns about, is that really a way to go where you've got, much lower hanging fruit, quote unquote, that has immediate impact on you.
Thank you. I think we'll mark blockchain with early days tag. Does that sound about right? People are interested, work is being done, very little adoption. Fair? Next question. This is a question coming about, this person actually asked for names of providers, but I'd like to stay away from that approach. But I would like to ask the question in the sense of, are any of you seeing bots used for financial reporting? Seeing it inside your company or elsewhere? Nobody's raising their hand or voice, so that sounds like a no. I'll move on. Here's a question that anybody who'd like to take it could speak up. Will AI allow a new distribution paradigm that allows risk capital and reinsurers to approach customers directly? It's an interesting question. I think I'd like to start with Alex. You might have the best shot at it.
Yeah, it is an interesting question. I think reinsurers have already started doing that, meaning approaching the customers directly, not necessarily using AI, but just more traditional methods, maybe adding some digital distribution in there. But If I speak about the product that Combine offers to the customers, mainly around accident and health protection and supplemental insurance, what we find is we generally need to create demand for those coverages, unlike home insurance that Aviat is involved in, or automobile insurance, right, where those things are typically required and demand already exists. We tend to see that we have to make our customers understand the value proposition, and once they do, the demand to purchase is there. So my point to that question then, if reinsurers or anyone else are going to use AI to approach customers directly, at least in the line of business that we offer here, there will have to be a very clear value proposition that comes across without, and that could be sometimes difficult to do without person interaction.
Thank you. Does anybody else care to add anything to that one, or I'll move to the next question? Oh, okay. Here's good question for everybody. Do you think analytics will change the future job profile of underwriters? And with that in mind, why would a bright 21-year-old want to work as an underwriter for an insurance company? So it's kind of a two-pronged question. And let's start with Fausto and go from there.
Yeah, so I think AI will help and take the underwriting, the decision-making process and the decision-making to the next level. Why would a bright 21-year-old want to get into underwriting? I can't see AI for the most part taking over all the underwriting functions. There's some very sophisticated lines of business out there in insurance that I still think need to have the underwriter's perspective for it. Auto did this years ago with computer-assisted underwriting. Everything went into a box, and you found carriers going back to underwriters to making some of those decisions. So I think it'll move underwriting a long ways, but I think there's going to be plenty of opportunities due to the sophisticated lines that are out there.
Thanks. I should mention we have a webinar coming up next month, humanizing the claims process. And then really it goes to what you said earlier and what you just said about always going to need smart, bright people to handle the pieces that AI cannot handle. Thank you for that. Aviat, do you have any comments on how analytics will affect underwriting?
Yes, I would like to. And I think it's actually a very interesting angle for how a young generation could get and what to do, would they find enticing in joining the industry. And I think the answer is actually within the question here. I think the possibility to work with cutting edge technology to affect people's well-being on a massive scale, this is what could potentially attract talent into the industry. Many people that are talented and have high capabilities are looking for the ability to make a big impact on other people's life, and are looking to be working with cutting-edge technology that would enrich their professional capabilities and experience. So in fact, I would even argue that transitioning into a much more technology-driven underwriting could be a great source of attracting new talent, more tech-savvy talent into the industry.
Good, thanks. I'll summarize that as it may be viewed as cool now. Alex, I know this is probably something you work on and think about almost every day, so I'll ask you to comment on how analytics might impact underwriting and why are young people attracted to the industry.
Yeah, and that's a great question. I agree with all the previous answers. I certainly think that underwriting profession will continue and will flourish. It will get even better. I think it will become more sophisticated with the tools that are available, but the personal judgment of an underwriter that's critical to assessing the risk, it will never be substituted fully with technology. It will be enhanced with technology, but I think that it will allow for more sophistication, but it will never replace underwriting as a profession. Chubb is an underwriting organization, and we're going to continue to be that way. That's what sets us apart, right? So the tools that are available there will only enhance that going further. So if you think about the banking industry, in the 1980s, when the ATMs were invented, the thought was, well, the bank tellers are going to go away as a job. And in reality, the bank tellers now, there's more of them than before, but they do more sophisticated roles like relationship banking. And I think in a similar way about underwriting.
Interesting analogy. Very good. Thank you. It's a question for Fausto. Fausto, you touched on automated estimating based on photos, that there are people working on it. We've heard about it now for some time. And the question here is, when in the next 24, 36 months do you expect to see working prototypes of that technology?
Great question. Thank you, Stephen. I think it's around the corner. And I caution that statement with it's around the corner for certain types of damage, certain types of impacts, and then the complexity of the damage, the complexity of the car. The biggest challenge that we're going to face with having that automated estimating is the way that cars are changing. And I don't mean with ADAS, and I don't mean with the technology inside of it, but if you just look at just the body panels and all the contouring and all the edges that are there now, is making sure that you can differentiate between contours and edging, and actual damage. But I think it's really right around the corner for simple losses, for those losses that could be through process claims. And right around the corner for me is 12 to 18 months.
Oh, great. Thanks for the answer. And simple losses, by the way, depending on how you define them exactly, could represent up to 60%, as far as I understand it, of an auto carrier's claims.
Absolutely.
Wonderful. Thank you very much. Question for probably Alex and Aviad, and then Fausto, if you'd like to add on. Interested in the view of how AI may reshape distribution, the impact on designing more flexible products that better fit consumer needs. And I'll ask Aviad to start.
Yeah, definitely. So this is actually a very interesting perspective and use case for AI. Right now, when you're offering, when any of us is offering an insurance solution for a customer, we pretty much give or offer by default what we think is the right offering for this specific customer. And we have some context when we target based on our ability to target and to have some prior information about the customer, but we don't really have a granular data points that would allow us to make a more informed decision about what is the risk appetite and financial constraints of this customer. And it's fine, because the current technology that is actually based on averages cannot support this kind of granularity. However, the opportunity when using AI is not about having just big data sets that could create different averages, but the point is about using those big data sources to assess a specific property's risk characteristic and a specific customer risk appetite and price sensitivity. So by using AI, I think the future possibility here is to allow companies that are leveraging this kind of technology, targeting and distribution system to provide a much more tailored solutions for those customers, which would result in better customer satisfaction and better retention, and of course, lower cost of acquisition.
Thank you. Thank you. Alex, would you like to add?
Yeah, from my perspective, I talked about creating demand earlier. And with AI, if you can imagine scanning all the available public data sources such as social media and other places, and understanding what a customer is doing in their life and what's going on in their life that may suggest demand for insurance that otherwise you wouldn't know about, right? Right now, the interaction between the agent and the customer is very, what I would call, manual, right? The agent sits down and goes over the value proposition. Well, if you can imagine the agent being notified that this particular customer is getting married, or they just had a child, or that their social media account is saying they're going on a skiing trip and they may need more accident insurance, right? Being able to interact that way in real time and to identify points of potential demand that the agent can then cater to, I think that's an opportunity that's available with artificial intelligence that way.
Thanks very much. Fausto, do you have anything to add on to the distribution question?
No, other than my comments before about getting product, getting pricing, getting sales, involved in decisions in AI, because you're going to get a lot of information out of the claim files. I think becomes critical to make the right product offerings at the right price through the right channel.
Okay, thanks. This is my own question, and it starts with Fausto, and I'll ask the others to comment as well. This is because you mentioned fraud. You mentioned $80 billion. You got my attention. I've seen lately new players coming to market getting heavily funded by investors like Shift or Friss and several others, and some traditional players continuing to deploy solutions in the market for fraud. But the question to you, Fausto, is what type of fraud specifically is well suited, if I could use that expression, well suited to be discovered by AI where human detection just couldn't do it?
Well, it's not so much that human detection couldn't do it, but that human detection couldn't do it quickly enough to be able to make the right decision. Because remember, in quite a few areas of claims, you're limited and timed, boxed in, so you have to make decisions quickly on it. But clearly, the auto physical damage fraud, property fraud, policy fraud on personal claims, understanding where there's a network at play that you don't see, and where there are patterns that you don't see, and individual adjusters looking at a claim for one person, somebody sitting next to him could actually be looking at the claim for the same person, and there might be enough characteristics to be able to find it, but since they don't talk and see each other's information, right, they really can't act on it. But there's quite a bit of impact. Medical fraud, tying in and making those quick decisions about what was reported as the injury and what is the injury, what is being billed, or what are those treatment plans are that may be exacerbating the injury. So I think those are some of the areas that you can really have an impact and have it quickly.
Thank you very much. For the audience benefit, you mentioned networks in fraud. I think specifically you're referring to organized crime networks, repeat offenders.
Absolutely.
Yeah. Okay. Okay. So we're coming up on top of the hour. We need to respect everybody's time. I need to take the time to thank our three fantastic presenters today, to remind everybody that the Insurance AI and Analytics USA Summit takes place next May 2nd and 3rd in Chicago. There are other Insurance Nexus conferences, by the way, including the Connected Insurance Conference later this month in Chicago, that will cover a lot of these topics with many of these companies and these presenters in attendance and doing presentations. So this is where you have great interest. Take a good look at those opportunities to see if they might be illuminating for you. I want to thank Insurance Nexus for presenting the conference. I want to thank our speakers one last time and our audience for these wonderful questions. We've got hundreds left unanswered. I'm sorry, but perhaps we can do post-event follow-up. With that, I wish you all a good morning, evening, afternoon, wherever you may be, and we'll see you next time. Thanks, everybody.
Thank you, Stephen.
Thank you.